Hello and welcome to Nitsevny. We are here with another video for beginners and it's related to investing. So what are you waiting for? Subscribe to this channel. The biggest misconception about investing is that it's reserved for the rich. That might have been true to some extent 10 years ago. But that barrier to enter is gone today, knocked down by companies and services that have made it their mission to make investment options available for everyone, including beginners and those who have just small amounts of money to put to work. In fact, with so many investments now available to beginners, there's no excuse to skip out. And that's good news, because investing is the best way to grow your wealth. Here are 4 ways you can start investing as a beginner. Number 1, exchange-traded funds. ETFs operate in many of the same ways as index funds. They typically track a market index and take a passive approach to invest. They also tend to have lower fees than mutual funds. Just like an index fund, you can buy an ETF that tracks a market index like the S&P 500. The main difference between ETFs and index funds is that rather than carrying a minimum investment, ETFs are traded throughout the day and investors buy them for a share price, which, like a stock price, can fluctuate. That share price is essentially the ETF's investment minimum, and depending on the fund, it can range from under $100 to $300 or more. Because ETFs are traded like a stock, brokers used to charge a commission to buy or sell them. If you plan to regularly invest in an ETF, as many investors do, by making automatic investments each month or week, you should choose a commission-free ETF so you aren't paying a commission each time. Number 2, investment apps. Several investing apps target beginner investors. One is Acorns, which rounds up your purchases on linked debit or credit cards and invests the change in a diversified portfolio of ETFs. There is no minimum to open an Acorns account, and the service will start investing for you once you've accumulated at least $5 in roundups. You can also make lump sum deposits. Acorns charges $1 a month for a standard investment account and $2 a month for an individual retirement account. Our unsolicited advice? Max out that IRA account before you start using the standard investment account. There are tax perks to the IRA that you don't want to miss. Another app option is Stash, which helps teach beginner investors how to build their own portfolios out of ETFs and individual stocks. Stash carries just a $5 account minimum and has a similar fee structure to Acorns, though balances that top $5,000 are charged 0.25% of that balance per year rather than the flat fee. Number 3, a robo-advisor. You know you're supposed to invest. You've managed to scrape together a little bit of money to do so, but you would really rather wash your hands of the whole situation. There's good news. You largely can, thanks to robo-advisors. These services manage your investments for you using computer algorithms. Due to low overhead, they charge low fees relative to human investment managers. A robo-advisor typically costs 0.25% to 0.50% of your account balance per year, and many allow you to open an account with no minimum. They're a great way for beginners to get started investing because they often require very little money and they do most of the work for you. That's not to say you shouldn't keep eyes on your account. This is your money. You never want to be completely hands-off. But a robo-advisor will do the heavy lifting for you. And if you're interested in learning how to invest, but you need a little help getting up to speed, robo-advisors can help there too. It's useful to see how the service constructs a portfolio and what investments are used. Some services also offer educational content and tools, and a few even allow you to customize your portfolio to a degree, should you wish to experiment a bit in the future. Number 4, index funds. Index funds are like mutual funds on autopilot. Rather than employing a professional manager to build and maintain the fund's portfolio of investments, index funds track a market index. A market index is a selection of investments that represent a portion of the market. For example, the S&P 500 is a market index that holds the stocks of roughly 500 of the largest companies in the US. An S&P 500 index fund would aim to mirror the performances of the S&P 500, buying the stocks in that index. Because index funds take a passive approach to invest by tracking a market index rather than using professional portfolio management, they tend to carry lower expense ratios. a fee charged based on the amount you have invested in mutual funds. But like mutual funds, investors in index funds are buying a chunk of the market in one transaction. So, these were the top 4 ways that will help you to begin investments as a beginner. What do you think about this video? Let us know in the comments section. And if you like this video, then don't forget to hit the thumbs up and subscribe to this channel for more amazing videos. Hit the bell icon to get notified first. Thanks for watching. We'll see you in the next one with another informative topic.